Rate cuts are coming and we're all going to get rich. But what does rich even mean? Are we rich? What can these pixels on a screen actually buy in real life? We're going to talk a little bit about inflation, but most importantly, the context of this video is that this Wednesday, the Federal Reserve is about to cut interest rates for the first time in 2025, while the S&P 500 sits at record highs. So this is only the third time since 1996 that this has ever happened. So the big question is, what is actually going to happen next? Let's break it down in this video. Okay, so here's the setup. U.S. stock valuations have hit the highest levels on record. So if we take a look at this chart right here, the blue line is basically a combination of trailing price to earnings, forward price to earnings, CAPE ratio, price to book, and a bunch of other stuff, market cap, GDP, all that stuff. So average percentile full history. Now, the white line is the logarithmic line of the S&P 500's growth since basically 1900. The source of this is Bloomberg. So we hit a new high as of August 2025, just about a couple weeks ago. And you can see here about every 25 years or so, we're basically hitting this all-time high. So you have 1929, 1965. Yes, that's 36 years, I understand. And then you can see here in 2025, we did it again. So what does this all mean? So we have basically U.S. stock valuations hitting all-time highs. They're actually surpassing the dot-com bubble of 2000, as I just showed you the 1999 line, and even the 1929 peak before the Great Depression. But here's the twist. This might actually be justified because we are in the middle of the biggest technological revolution in over 20 years, and that is artificial intelligence. That's going to be automation. It's going to be data-driven, digital, everything, okay? I use this as a prop. It's just prop money from Amazon. It's literally just paper that looks like dollars. But basically, if you think we're going to be using cash in the next, 15 years, you're absolutely kidding yourself. So if we look at this is the S&P 500 price to book value ratio. So if you look at November of 68, it was 2.2x. If you look at July of 82, is 0.9x. If you look at March of 2000, aka dot-com bubble, 5.1x. If you look at February 09, okay, after 07, 08 crisis, is 1.6x. And look at August 2025, we're at 5.3x. So what does all this mean? So usually the Fed is going to cut interest rates when the economy is weak and stocks are nowhere near record highs. But this time, GDP growth is still running over 3% per year, okay? You can see historically, well, not historically, this is only back until Q1 of 2023, but we're basically just in line of what we've had over the past 2.5 years. So inflation as well, give me 1 second, sorry. Inflation has core CPI at 3.1%. This is well above the Fed's 2% target. You know, we always hear basically the Fed's mandate is to keep inflation or core CPI around 2%, and it's to keep unemployment at a lower single-digit unemployment rate, if you will. So why rate cuts at all? Like, why are we even cutting these rates? Because the labor market is cracking, okay? The index of consumers saying jobs are plentiful just fell to its lowest level since 2021. So down more than 20 points in 2 years. So the Fed is basically saying, hey, we have to cut rates, but we're going to blame the weak labor market for doing so. And this isn't just some inflammatory chart. This is actually going back to 1990. So you can see what's going on right here. This is the Conference Board Consumer Confidence Jobs. I mean, again, it's a survey, but if you talk to anybody, especially in white-collar jobs, people are getting laid off left and right. So job market is not too hot right now. But here's where it gets interesting. The S&P 500 just hit its 24th record high of 2024, and it's up over 35% since April's low, since Liberation Day. One of the best 5-month rallies in literal stock market history. And now rate cuts are actually coming in on top of that. So when the Fed cuts rates, typically with stocks at or near record highs, history tells us that the S&P 500 loves it. Okay, why wouldn't it, right? Cheap money. So in fact, 20 out of the last 20 times this has happened, okay, 100% of the time it's happened. So obviously history is not indicative of future results, but this is pretty strong data right here. So the S&P 500 has finished higher 1 year later by an average of 13.9%. You can see that right here in the bottom right side of the screen. But here's the catch. Short term, it may be volatile. So if you look at this next month column right here, you can see that some of it's green, some of it's extremely red. Next 3 months, In past history, since basically 1991, it's all been green in the next 3 months. But before that, it was basically 50-50. Half the time you're green, half the time you're red. Next 6 months, you can see here that actually last time in 2019, it was down 20%. Okay. Same thing with the following month in October, down 7%. But over the next year, it's all been green. Okay. So pretty important chart right there. If you take anything away from this video, this is basically what I meant by the title of, hey, Fed's cutting rates, we're all getting rich, right? If you wait long enough, probably. But again, what is this stuff going to buy you when a Honda Accord 20 years from now is going to be $80,000, right? So that's something you need to think of. Are you preserving your purchasing power? That's the whole point of this channel. Since 1980, when the Fed cuts rates near market highs, the S&P 500 has fallen 11 out of 22 times the next 30 days, okay? So if history rhymes, we could see some short-term pain before long-term gain. So that makes sense. I mean, rate cuts are coming into hot inflation right now. I don't want to say hot, but definitely on the higher side of average, okay? I'm not talking like 2020, 2021, but obviously higher than 2%. Plus, you have AI-driven productivity boom. Typically, so there's two schools of thought about this. I was actually at an Oktoberfest at my neighbor's house on Saturday, and I was talking to this one gentleman. He's a CPA, but he works for a law firm. He's into all this stuff. So I was telling him, I think technology is deflationary, okay? Think about the, big screen TV that took up half your living room and cost $5,000, 20, 25 years ago. Now you have TVs that are razor thin that are, literally 100 inches that cost a couple grand at Costco. So that's just an example. But when it comes to productivity, maybe that could increase value. I don't know. But investors, they're already on risk on mode. Okay. People, they dollar cost average. They buy all the time. They don't know what to do with their retirement accounts. They literally just buy the S&P 500 because they don't know what else to do. That's what you're supposed to do, right? So this is the perfect storm for higher asset prices over time, in my opinion. So if we take a look at inflation, this is basically core CPI at 3.1%. This is the white line, okay? It's actually fallen pretty significantly, as I mentioned, since like 2022. That was peak after COVID. It actually dropped in 2020, and then it just skyrocketed over the next couple of years and has been steadily declining over the last two. Now, let's talk about something that's outside of the realm of equities, okay? So we have gold, Bitcoin, and the wealth gap. This is important. Pay attention. But before that, let's get into today's sponsor, Policy Genius. When planning for your financial future, you need to start with a strong foundation. The foundation for my family starts with life insurance. Life insurance is one of the best ways to protect our loved ones, yet 72% of Americans overestimate how much it actually costs. A lot of people put it off. I get it. Life insurance doesn't feel urgent until it is. But let me make it easy for you. Policy Genius makes finding and buying life insurance super simple. They help ensure your loved ones have a financial safety net to cover debts, living expenses, or just keep life moving forward if the worst were to happen. With Policy Genius, you can see if you can find 20-year life insurance policies starting at just $276 a year for $1 million in coverage. It's an easy way to protect the people you love and feel good about the future. Some options are even 100% online, and you can skip the medical exam. That's a win in my book. So here's what I like the most. Policy Genius lets you compare quotes from top insurers in just a few clicks so you know you're getting the best deal. Their licensed agents aren't there to upsell you. They walk you through everything. They handle the paperwork and they answer your questions with zero pressure. And if you're relying on only policy through your job, be careful because it might not be enough. And it probably won't follow you if you leave. This is a piece of financial planning that too many people overlook, but it's one of the most important. So if you're a parent, a caregiver, a spouse, or just someone who wants to leave your family with peace of mind, make this the year you check life insurance off your list. Secure your family's future with Policy Genius. Head to policygenius.com/whiteboardfinance or click the link in the description to compare free life insurance quotes from top companies and see how much you could save. That's policygenius.com/whiteboardfinance. Okay, so look at what gold and Bitcoin are doing. So this is straight line price action, okay? It tells you everything you need to know. They're already pricing in low rates, higher inflation, more liquidity sloshing around the system. If you look at a chart of M2 money supply plotted over Bitcoin, Bitcoin basically just tracks the line of M2 money supply basically 60 to 90 days later. It's basically a 2 to 3 month gap. So here's the kicker. The top 10% of Americans, they already own 93% of the wealth, okay? So yeah, that's being a little inflationary the way I'm wording that. But basically, these rate cuts, they're going to likely make that gap even wider. So this chart right here is showing you percentage of U.S. households' equity and mutual fund shares owned by the wealthiest 10% of the population. The wealthiest 10% own 92.5% of this, okay? So what's the takeaway to all this? What's the point of this video? So the Fed is about to cut rates with record high stocks. We have inflation, I don't want to say hot, but definitely higher than what the Fed's mandate is to keep it at roughly 2%. We have a weakening labor market. That's the biggest one in my opinion. All this stuff can be propped up because you know how Americans are. They would finance, a cup of ramen soup for 72 months if they could, right? Everything is on monthly payments. What's the monthly payment? How do I stretch this out? What do I do? No one is debt free. Okay, that's and it's dumb to be debt free in a fiat system where the money's literally made up. Why would you want to be debt free? Take out as much fake money as possible and buy real stuff with it. Okay, it's like duh. So anyway, technological boom, unlike anything we've seen in decades. So those four things. Sorry, I went on a tangent. Record high stocks, a hot inflation, weakening labor market, technological boom with AI. What is this going to mean? So as I showed you in the chart earlier in this video, short-term volatility, probably, okay? Long-term asset boom, okay? History says yes. And it's a great time to be a long-term asset owner if you can handle the ups and downs along the way. That's pretty much been the ethos of my channel since 2017, since I started doing this. But as always, you need to stay rational and you need to stay long-term focused, and I'll see you in the next video. But one last chart that I forgot to put in here. I'll just do this live. Probably shouldn't be sharing all this, but whatever. Let's see. Fed funds chart. Let's see. St. Louis. So what I've been telling people in Whiteboard Finance University for basically 2 years now, if you look at this chart, this is basically just the Fed funds rate. This is what the Fed mandates interest rates to be for overnight lending for other banks, commercial banks. So if you look at these gray bars, these are basically just indicating recessions, okay? So you had, let's call it savings and loan crisis, dot-com bubble, great financial crisis, COVID, whatever. What's something you notice that happens right before all of these gray bars that indicate recessions? Rate cuts, recession, rate cuts, recession, rate cuts, recession, rate cuts, recession. Oh, look where we are right now. Rate cuts. They're going to cut again. What do you think's going to happen, dude? We're right here. We're right here. We're right here. We're right here. So I think that I don't know. I don't want to come off as because no matter what you say on YouTube, you can't please everyone. Okay. It's like trying to keep a woman happy, dude. It's mission impossible. Might edit that last part out. All I'm trying to say is I'm tiptoeing right now. I really am tiptoeing. I have a good chunk of cash in SGov, money in Bitcoin, real estate, collectibles, gold, bunch of stuff, right? Just trying to stay as diversified as possible. Only thing I don't really have exposure to right now are commodities, unless you want to look at like gold or Bitcoin as a commodity, if that makes sense. Then I do have exposure. But basically, I usually dollar cost average into the market. I haven't put money into the market since basically Liberation Day. I put in, I don't know, 60, 70 grand. I can't remember how much money I put in. And then since April, it's obviously done very well because I'm not a paper-handed. Put your money where your mouth is. Everyone knows that it's going to go up and to the right, but for how long? So when these rate cuts start coming, I think it's going to be volatile, as everything in this video indicates. And I think we're going to see that roaring 20s jubilee. And then after that, who the hell knows? It's not funny. I hate to use that word. In my last video, I talked about, are we in late stage empire? And literally hours later, that same day, we had a very famous assassination happen last week. And I'm not trying to, again, not a doom and gloom channel. I'm just saying, I think after this president's term is over, your guess is as good as mine. Okay. Even now, even during it, I haven't put any money into the market in, I don't know, 3-4 months. So, that's kind of where I'm at, you guys. I'm happy with where my portfolio is at. I'm happy to ride down a 20, 30% downturn, just like we did in 07, 08 and during the flash crash during COVID. But that's different. I was in college in 07, 08. You know, I had a good chunk of net worth in 2020, but now it's 5 years later. My net worth is higher. The stakes are real. You know, this is real for me and my family. This is something I don't want to squander. And it's easy to see your portfolio go from 10 grand to 7 grand, you know, 30%. It's different when you're at, you know, 1 million to 700,000, 10 million to 7 million, right? It's a different ball game. It's the same thing. You just add a zero, but the effects are potentially generational. So that's kind of why I like to stay diversified. And again, the best thing you can do is if you run a business or if you know that you can directly control an outcome such as your ROI, whether it's through profit margins of selling a good or a service, or you knowing that, hey, for every dollar in ad marketing spend I put in, I get $3 back, I'd probably go that route right now. And I'd also beef up your savings as well. I always indicate for 3 to 12 months of emergency fund, 3 months if you're single bachelor, 6 months if you have a family, 12 months if you're in a highly unpredictable income, whether you're a commission salesperson or a small business owner, then I would do 12 months. That sounds like too much, but trust me, you guys, I've lived through a couple of these now, okay? So hopefully this video was educational. As always, if you got value from it, please hit the like button, hit the bell for notifications, share it with 13,000 friends, and as always, have a unbelievably prosperous day. Just a friendly reminder to everyone watching this video.
It's all going to zero against Bitcoin. If you don't understand that yet, you're going to be impoverished.